How's it going, everyone? Welcome to another video in the course. This is an updated video on Orderflow. Um, Essentially, this is my take on a similar topic to what I talked about in the Orderflow video, but it's a bit different. Now, what I'm going to be covering before we move into, just specifically Orderflow is supply and demand ranges. Now, this isn't a foreign topic to any of you because all of you have been using supply and demand zones throughout your trading. So all I'm doing is reinforcing and providing a different perspective on supply and demand zones and introducing them to you as supply and demand ranges instead. Now, this will work hand in hand in your order flow, as well as, just observing and understanding what sort of order flow we're in, and also figuring out a method of trading. Because a lot of us get tied into refining order blocks and stuff like that, and so far from using these ranges, I found that I've been able to enter trades a lot more frequently. And if as many of you know, the EU trader took as well, that was using a supply range. If I did refine it, I'd never be able to enter it, right? So this is essentially what ranges are. Ranges are basically the last few candles before an impulsive move up or down. Now in this case, we have two different ranges. We have supply range. So as you can see, supply range essentially is the last few buy candles before the sell. And what I mark them up with is a red box essentially. This is to tell me that this is a supply range that is formed, or essentially a supply zone on a slightly higher time frame. It would just appear as one candle, but I'm using mainly the 15 minutes because that's something that you can see a lot clearer on the 15 minutes. And you can use the method I'm about to explain in any time frame, but time frames above the 15-minute will work a lot better. Anything below that, you can still use it. If you're a scalper, it would help if you can identify the order flow in the specific time frame you're trading in. Maybe you're trading between the first 2 hours of the London Open. This will be quite beneficial because you'll be able to quickly identify what sort of order flow you're in, as well as areas of interest that you might want to trade from. So essentially, supply range is the last few buy candles before the sell, and a demand range, which is marked with blue, is the last few sell candles before the buy. So that's really the definition of a supply and demand range. They are the last few candles before an impulsive move, which will most likely look like a supply and demand zone on a slightly higher time frame that would just be one candle. So these are what ranges are. Now that you've sort of understood how to mark these ranges up, I'm going to show you a chart which is on AU of how you basically mark them up, right? So I'm going to delete all of these and redo everything so that you understand what I'm looking at. So let's start from let's go backwards, right? So this is a AU chart of a current price action, and we're going to be marking out supply and demand ranges. So let's start with the obvious, right? Supply and demand, you want to see an impulsive move, and it should be something that breaks structure specifically, right? Because if it breaks structure and you have an impulsive move, that's a supply or demand zone. So clearly you can see that we have a supply range here, right? So I'm going to mark it up with a red box, and then we have another supply range here. We have another supply range here. These are the last buy candles before the sell, and you can see that most of them break some form of structure. This may not be as impulsive, but it has broken structure and it is a valid supply zone. So this is basically supply zone, right? Let's mark up a few more. You have a break of structure here. This is your supply zone, right? You've just got one candle there, so that's okay. You have another sort of area here. You've broken structure here, supply zone. You have another one here, so this will be your supply range. Let's look at some more. This one, you can either mark this candle or you can mark this whole area over here, because that is your full supply range. What you will quickly come to notice is that these supply ranges tend to be tapped into either the distal, the equilibrium, or fully, it gets tapped into and then pushed all the way down. So let's mark these up with a Gantt chart, and let's make this a range. There we go. So I'm going to just be marking them up with this so that you can clearly see what I mean. We have another one here, right? We've got a mitigation of the range. You have another one here. You've got another mitigation of the range here. And let's look at some more examples. So you have another supply range here. You just got one candle here. You have another one here. You have another one here. You have all these supply ranges that break structure of an impulsive move. We have a demand range here, right? Those are the last few sell candles before the buy. What else can we see? Now we have these candles, we have these supply zones, we have this over here. So at this point break structure, we have essentially the last few proper sell candles over here. So we have a demand range here. Now let's have a look at a few more examples. We have another demand range, and most of these ranges you'll see some form of reaction to them, right? So we have another supply range here. It's just one candle. I'm just going to make it a bit bigger. You can see it broke structure here, had a move down. So that is a supply range, right? You don't always need to see an impulsive move. If it's a move that pushes away from that zone and breaks some form of structure, then that is a supply range itself. Now you can see this supply range did get mitigated as well, and most of them do get mitigated if it's following the order flow, right? You have the demand range here, which obviously got mitigated as well because we're following order flow. Now let's look at a few more examples. We have another demand range here, right? Demand range mitigated as well over here, right? This demand range did break some form of structure over here. We have another demand range here. We have a few more supply ranges. We have a supply range here, supply range here. Let's change the color so it doesn't get confusing. Supply range, we have another supply range here. What else do we have anymore? We have one over here. We have another supply range because we broke structure over here. This one broke this structure. This one broke this structure. Let's look at a few more. We have another huge supply range here because this did end up breaking this structure. Another supply range here. We did break this structure and this. We don't really have a demand range here. I wouldn't really class it as a demand range. We have another supply range over here. Another one here. We broke structure, impulsive move. Now, are there any more? We have another one here, right? You can mark this point just to be specific, or you can mark the whole range on top. Now we have could class this as a demand range as well, because we did break structure over here. We have another supply range. So I could go on and on just marking these up, but the main point is when you sort of look at an overview, right? If you look at a chart like this on the 15 minutes, what you slowly start noticing is you can clearly identify what sort of order flow we're in. So if you look at price in this region here, you can see that we have a lot of supply ranges forming, and that gives you an idea that price in this instance is in bearish order flow, right? Let me mark it a bit more specifically. So you realize there isn't anything marked here, but what you actually haven't seen is we are breaking some minor structure points here. We are breaking structure points here and here, right? So these points are demand ranges as well because we are breaking some form of structure. We have another one here, and yeah, that's basically all the demand ranges. When you follow price, right, you don't always need to see huge breaks of structure like the ones I've marked up here, which are really clear, but these minor ones as well do make a difference because it gives you an idea of what sort of structure or what sort of order flow we're currently in, and you can see clearly from the chart what sort of order flow we're in, right? At this point we're in bearish order flow, at this point we're in bullish order flow, bearish, sort of bullish at this region, we're sort of turning bearish here, a little bit bearish here, bearish over here, just completely bearish at these points, slightly bullish, but throughout we're just bearish. Let's look at a good example of some bullish order flow, right? Let's mark up some clear bullish ranges. We have this one here, we have another one here, we have another one here, another one here, another one here. There are lots of ranges here, and you can quickly identify what sort of order flow we're in. So in this point you can see we're in a lot of bullish order flow, right? We have another one here, another small one here, minor bullish order flow. So you can see at this region here we do have some form of supply ranges here, but they don't really have a lot of them, because at this point of time in price, most of the points where you see supply ranges will most likely be in pullback regions. And you can see this one's a pullback, push down, continuation, a little bit of pullback, push up. We're all in bullish order flow. So the main purpose of this video is to help you identify what sort of order flow we're in, and marking these ranges up will be quite beneficial because it gives you an idea of what order flow we're in and what sort of trades can you look for, right? Because sometimes when you sort of choose one POI itself, basically refine your POI to the T, you may not always get mitigations at that point. But if you take a look at just ranges in the market, you slowly start realizing that price actually does mitigate these ranges and push away, right? So you can see in a lot of instances you see mitigations of these ranges. You look at this, you have a violation here, but you have a mitigation of this range, and then this one. You know, the best part is if you sort of draw a line here, you can see that we did form a reaction off of it and then a push down, right? So all these ranges, they do show some form of reaction. Whether it follows through or not depends on what sort of order flow we're following up with. But yeah, that basically is a video on using supply and demand ranges to figure out what sort of order flow you're in and how that can benefit you in terms of choosing places to trade off of. And yeah, so before I end this video, I will be covering a trade breakdown of a trade that utilized this specific range concept and how I traded off of it. So let's get into that, and I think that will clear up a lot of questions you may have in terms of how do I use this in my trading. Right guys, let's have a look at a trade example that utilizes ranges, specifically a supply range and as well as a demand range. So this is a trade taken on AU. Obviously these trades wouldn't make any sense because they were in the Asian session, so none of the trades were taken at that point of time. But towards the London Open, this was right about 15 minutes before London opened, pre-London essentially. This is typically where I start my trading hours. 15 minutes before gives me a bit of time to look at what the chart has done during the Asian session and what we can expect to see. So let's get into this really quickly. We have a clear demand range over here, right? So at this point of time, you can see that, let's mark up all the demand range. We have a demand range here. We have another one sort of here. We have another one here. And we have one here, right? So at this point of time, when price is going up, we have quite a few demand ranges forming. And at this point of time, we see, cool, okay, we've got a lot of demand ranges forming. Price is still pushing up. So at this point, we should think, cool, we should expect price to continue pushing up. That's the expectation based on the order flow shown at this point of time. But what we do next is we have a demand range here. So you'd expect maybe a pullback and a mitigation and a push off, right? That's usually what happens with demand ranges. But at this point of time, what we quickly realize is that this demand range did not hold up and price basically invalidated this demand range and this one and broke right through it. Now when that happened, we got a impulsive move down. We have a break of structure as well as a chalk that formed on the seconds time frame. On the minute, this was the first initial proper mitigation during London. The first mitigation was probably during the Asian session, about 8:30 a.m. for me, which most likely was around 1 a.m. for the people living in the UK. These are not my trading hours, so whatever happened here, I did not take any of them. So what happened was I was basically looking at price action when it first tapped into the the supply range. Now, when it tapped into the supply range, that was my first cue that, okay, we've tapped into the supply range. The expectation is that we're going to continue pushing down and continue forming more supply ranges that will potentially be mitigated. So we formed a supply range and we slowly pulled back up at this point, right? So we have quite a few demand ranges forming here as well, and what we can see is, okay, at this point we can clearly see that we have a few demand ranges forming. Now at this point of time we're in a supply range, and I'm asking myself, it doesn't seem like price is gonna really, you know, show any shorts, right, that we could take. And this is the instance where I went, okay, that's a potential short. Now, why did I say that? First off, we have a demand range here that got violated. So at first it got violated and I went, okay, cool, maybe it's not gonna, you know, maybe it's tapping to this point, right? Let's replay it so I can show you exactly what I thought. So at this point, violates this, I went, okay, that's the first sign that we're not going to continue, but we have another demand range here, which we essentially tapped into, right? But what happened next was we basically pushed up, right? We did create a higher high, but we wicked it and we pushed all the way down. So at this point, if this was indeed a high, we have a demand range here, which should have been respected, but we also broke through that. And when we did break through this demand range and this one, what happened was we created a change of character. So in this instance, we have a change of character. Our POI that we've marked grabbed liquidity over here, and we've also we're basically in a supply range, which makes a lot of sense to take a trade off of. So what I did was I essentially marked up, I think it was a 30-second. So I marked up the last 30-second candle. And within that was essentially, it's a 5-second. What you can see is a clear supply range. So that was my last supply range that told me that, cool, if we're going to follow through with it, we should mitigate the last supply range, which is this one, and continue pushing down. So entry was taken almost at the base of the supply range, and what happened was we got a mitigation of that supply range and a push down, right? And this concept, right, you can see numerous times supply range here, right? We have another, that's the only one, sorry. So we've got a mitigation of that. We have another supply range here. This one is in a supply range because it didn't really break any structure. And a lot of times you'll see these supply ranges forming, and basically you might see continuations from it, right? So you have another one here. If we scroll down, we have another one here. This point will be, let's pause it a bit, have a supply range here. We have a mitigation. We have a supply range over here. We have mitigation. These ones aren't any supply range because they haven't broken any structure. This one is in one as well. This one might be one. This one might be, because we did break structure here and we did tap into it. And what do you know, it keeps pushing down, right, from all these supply ranges. So all these continuation trades that we might be looking for, if we refine them, we might not get tapped in. But if we look at them in terms of ranges, there are numerous opportunities to enter the market at this point of time. So to summarize the video, if any of you are still unsure about how supply ranges work, I suggest rewatching this video. And as I'm marking these supply ranges, mark them up on your chart as well, right? Mark up your charts and ask yourself, is this a valid supply range? Is this a valid demand range? How does this look? What does it react off of? And I feel this will help you identify order flow a lot easier, and also take trades that make a lot more sense, because you have this full range. Essentially, this range is a supply zone itself, because What makes a supply zone? It's the last buy before the sell, and what makes a demand zone is the last sell before the buy. So you're not doing anything different, but you're just marking out the last true buy and sell candles of the market before an impulsive move or a break of structure. So that'll be all for this video, guys. I hope you've gotten some valuable information from this, and I hope that you guys find some value in terms of how you can use this in your trading. I will see you in the next video. Take care, everyone.